Okay. Good evening, ladies and gentlemen out there in the virtual world. My name is Willie Lightfoot. I am the president of the United Professional Barbers and Cosmetologists Association. I have with me tonight my vice president of the United Professional Barbers and Cosmetologists Association, Wade Davis. I also have with me professional master barber as well as New York State Barber Examiner, Joseph Mons, and we have some other members who will be joining. We have a special guest tonight, Andrea Colline from Consumer Credit Counseling Services of Rochester, and she has some exciting information to share with us at our shop talk on tonight. And we want to welcome her, and we know we do our virtual snaps and welcome her in, Andrea, to give us this very, very timely. We know we're living in a time where people are saying our country's heading for a recession. We see inflation increase, skyrocketing through the roof. Gas prices, everything's going up except people's income. And if there's ever a time where we need to understand our personal business credit, I think it's now, Andrea. So I'll just turn it over to you to introduce yourself and start your presentation. And thank you for being with us tonight.
Perfect. Thank you so much for having us tonight. We're very happy to be able to be here, and hopefully our information can help some of our folks tonight. So a little bit about our organization. So my name is Andrea Colline. I work at Consumer Credit Counseling Service of Rochester, and we have been in the Rochester area for over 50 years now. And we're very proud to be the only locally based nonprofit credit counseling agency in the area. And what that means is that we have many different services, but our main mission is really to help people with managing their finances. And again, I just want to say thank you so much for taking the time to attend today. Hopefully this information is really helpful to you. So our mission is to focus on the financial health of individuals and families, helping those that we're serving to achieve financial wellness through the different programs and services that we offer. So in our 52 years at Consumer Credit Counseling Service, or of Consumer Credit Counseling Service, I should say, we have we have delivered a multitude of one-on-one debt management counseling, credit counseling, financial education, all of it. And we are a member of the National Foundation for Credit Counseling. We're also licensed by the New York State Department of Financial Services, and we are a HUD-approved housing counseling agency, which gives us the ability to offer foreclosure prevention counseling as well as homeownership counseling. And we are a member of the Better Business Bureau with an A+ rating. And one of the big reasons that I really wanted to connect with everyone today is because we have received some funding to offer financial counseling to specifically to small business owners. So the financial counseling really consists of us helping people manage their own personal finances. So whether it's from budgeting, whether it's from managing their credit, defeating their debt, whatever it is that they're really trying to manage on their personal side of things, because it's been, well, first of all, the pandemic has been a challenge, to say the least, for business owners over the past few years, number one. And number two, just over the years of credit counseling and offering this type of counseling, we've seen small business owners struggle with just managing their own personal finances. Maybe they're getting into debt or using their credit, or it's impacting their credit, or all of the above. So that's something that we really want to educate people about. We want people to know that we do offer the one-on-one education as well as counseling to really, be out in the community. So and that's my information, which I can give you as well. But our presentation today is really going to focus on personal credit and business credit. So this workshop isn't designed to tell us, how we're going to manage our business expenses and how we should do this and how we should do that. It's really more of managing the personal side of it, but it will talk about how it can impact business decisions in the future. We're also going to go just real basic and talk about personal credit and understanding that. We'll talk a little bit about the score. We'll talk about building that credit and sustaining that credit, as well as pulling in some business credit basics in. And then we'll, again, I know I talked about our program and our service, but the last few slides will just tell people how they get connected and review the different programs and services that we offer. So let's start here. We'll talk about business credit as it can relate to personal credit. So depending, I know that we have everybody in all different stages and ages, maybe some of us looking to start a business. We're currently running a business. Maybe we've had the business for a while, or whatever the case may be. And maybe this might be some stuff that we've experienced and that we know, but we'll hit on a few points. So first of all, when it comes to commercial lending, if we haven't been in business for, and I don't want to pinpoint an exact time because it really just depends on the lender, but say, I don't know, between 2 to 5 years, maybe I'm overdoing it a little bit, but if we're looking to get a business loan, they have nothing to look at. We don't have any, there might not be any debt in the business name. There might not be any credit. We may have not established those relationships just yet. And in many cases, they're going to look at our own credit report, our own personal credit report as part of the factor when deciding whether we're going to get approved for that loan or not. So it is important to have a handle on it. It sounds so easy and it sounds so cut and dry, but it's not. Whether it comes to just managing the debt itself, which can be completely overwhelming. We're not alone in that. Or just figuring out like different decisions and maybe just trying to figure out like, who do I talk to about this? So the commercial lenders can look at our personal credit prior to giving us a business loan because there's really nothing else to base it on. So if our credit's not where it needs to be, it could affect our approval, for a business loan, which could impact our business in general. So again, just some things that, maybe we want to keep on the forefront of our mind when it comes to managing that credit. So traditional lenders, and when I say lender, I'm referring to like a bank and or credit union. They typically look for a minimum credit score of about 640 and higher. I'll talk a little bit more about credit scores, but just to throw it out there, which I feel like we have very knowledgeable audiences now, but our score typically ranges between 300 to 850. That's for FICO, that's FICO score. And like I said, I'll get a little deeper in the next coming slides, but that's usually what they want to see from us on that end of it. And they like to see, I said 2 to 5, but that's because that's what I'm hearing when I'm talking to business owners, but for at least a year, they want to see a steady, income, or not even income, but just that the business has been in operation and is succeeding, for at least a year prior. When it comes to our personal credit, let's touch base on that. Credit does impact our ability to do certain things and a lot of things. So on the personal side, like our first thought is obtaining a loan. So whether it's a car loan, whether it's a mortgage loan, refinancing a mortgage, a credit card, all of our personal credit really comes into play when it comes to getting approved for that. And I think we understand that. In some cases, some of us may have experienced, I know I did the very first apartment I've ever gotten. They want to collect some information about us. So we're not necessarily getting a loan. It doesn't typically appear on a credit report when we're renting an apartment, but they still want to know who we are. They want to know who's renting that apartment. So they're going to, ask us information about our income. They're going to ask us for information about, our debt, how long we've been at our employer, how long you've owned a business if you're self-employed. So getting an apartment and looking at credit kind of go hand in hand as well. Even it says car insurance, but it's really many types of insurance. So whether it's home owners insurance, mortgage insurance, a lot of organizations or insurance agents, I should say, credit, and that can impact your business too, but credit comes into play. It's not the and all be all as it is as important as it is when we're trying to, get approved for a loan, but insurance and many times may look at our credit report as well. So again, we want to kind of keep it, as pristine as we're able to. Some employment, I know that, everyone's different. This might not pertain to us as much if we're, renting space or we have a business and we're managing our own expenses, but maybe we've experienced this. Maybe we have a spouse or partner or child that's experiencing it. Some employers check our credit report now. It's not like the main factor of, becoming employed, but part of the background check. Any kind of financial institution, whether it's a bank or a credit union, for consumer credit counseling for that matter, we'll check a credit report as part of a background check prior to being hired. Many federal agencies do it, many municipalities, cities, governments, states, things like that as well. And it does help us, or I shouldn't say us, but like all of you who are self-employed individuals obtain more opportunity, because it would be a shame if like our business is succeeding and we're doing well and we have the ability to fund a loan that will help us to grow and we're managing things well. But if our personal credit isn't where it needs to be, or if we're denied because we wish we knew that, we wish someone had told us, maybe I shouldn't have applied for so many debts or credit too soon. Maybe there shouldn't be so many inquiries. Maybe I should have paid that balance down. So we're going to cover a lot of that today. And again, this can be covered on an individual case-by-case basis for our business owners. Our next. So when we talk about credit, I kind of want to just dive a little bit deeper into it because it can mean a lot of different things, just the word itself. But just to keep it basic, though I know it might, seem a little redundant, but I just want to, just for my own purpose, before anyone lends us money, they want to see how we manage our other debt. But it's not just about the credit score. We get tied into that. But you know why? Because we like scores, we like numbers, we want to see where we stand. It's a rating, and the better our rating, the more opportunity. It does give us a good sense of pride. We feel responsible. It's good to see that number go up. But it's not just about the score. There's different factors. There's 4 and even 5 C's that are part of the lending game. So the 4 main things we'll cover today is character. So character is the word that's used in the lending industry for how well we manage our debt, how current we are on debts, how if any debts have fallen into collection and how they're paid. So when a lender is looking at our personal credit report, whether it's for business purposes or just our own personal purposes, they want to see that the debts are being paid on time. Another part of that is of the lending process is capacity. So capacity means in the lending world, like how much can you afford? So people can have a fantastic score. Maybe their character's great, they're paying things on time, but they might have too much debt in comparison to their income, or the amount of the loan they're trying to apply for, or the not even the amount of the loan, or the amount of the loan or the item they're trying to purchase with that loan, whether it be a car or a house, is just beyond what's affordable. Sometimes the capacity is reduced because, I think I said it, but I just want to make sure I make it clear, there's too much going on with our current credit situation. Maybe there's too much creditor debt. Maybe there's our car loans are bigger, things like that. So somebody could have a good credit history, but because their money's tied up, they may get denied a loan for that purpose. So that means we want to start paying our balances down to the best of our ability, specifically credit card balances. And I'll explain why in just a few slides. Capital, we know what capital is. This is Shark Tank. That's all I always think about that. But capital is money. So in many cases, when we're trying to apply for a loan, right, they want us to put a down payment. Maybe not necessarily for a business loan. They might want to see that we have some reserves set aside for specific purchases or purposes for that matter. So capital may be part of the game, especially when it's a business loan. They might want to see like your income statement or your like a P&L, profit and loss statement, things like that, so they can kind of get a good feeling for what your capacity and ability is. And then collateral. So collateral is, what is it that we're trying to obtain? So maybe we're trying to obtain a business loan to purchase a car for the business or to purchase equipment, right? So what is it that we're trying to obtain? Business lending is different than personal credit, and if someone, even with your whole credit report and the whole system, it's a completely different process. And they look at different things. And another thing that could come in handy too for personal business is like your vending relationships. So if if there's certain equipment I'm paying for or renting, or I have a private agreement to purchase, or supplies that I'm purchasing consistently, that could help you as to where in our personal credit it may not as much. So those are just some factors to kind of help us. But just to pull it back in, this is based on our personal credit score. These are things that lenders are going to look at: how well we pay, how much debt we have, what our income is, as well as savings and what it is that we're trying to do with the funds that we're obtaining. So maybe we know this, and maybe I feel like we know this because I talk about it all the time, but let's just start from scratch. A credit report is a loan report. Anytime we borrow money, the data from that purchase, that transaction, or not even transaction, but that item is going to get reported on our credit report. If I've never borrowed money before, I'm probably not going to have a credit score. I'm not going to have anything being reported there. You can have collection items on a credit report. Collection items do not build your credit. People have asked me that before. People were under the assumption that it did. So a collection item might mean like an old utility that was unpaid that is now on my credit report, an old medical bill that was obtained that is now on my credit report. That is different ways that they can make people aware of those debts so they can collect on those debts. But that's not something that would build your credit. I think I jumped ahead a little bit. But your credit report is basically your history of loans and how well you've paid them. Anytime you apply for credit, it will appear in an inquiry. And when you get approved, it will appear as a credit item. So I'll get into that again next, I promise, next few slides. So there's 3 agencies that create credit reports, 3 companies, agencies, whatever word we want to use, but we have Equifax, Experian, and TransUnion. So to get a copy of your credit report, you can go to annualcreditreport.com. There's a lot of other ways and avenues that you can see your credit report as well. I know a lot of people like to use like the Credit Karma app. I know there's tons of apps that you can download. Some credit card companies will print this on their statements so you can kind of see, you know, where you stand with your score and all of that. But credit report, this is the official report. So I would recommend doing this at least on a yearly basis. There is no cost to obtain a credit report if you're doing it once a year. It might even be once a month now. I'll check. I know as of April and during the pandemic, you were able to pull it more frequently because you know it was a better way to detect if there was fraud or something like that. So you still might be able to, but a worst case situation, once a year, one from Equifax, Experian, and TransUnion per year. So to pull your report, if you haven't done it for a while or you've never done it, you go to request your free credit report. It will bring you to this slide, and then you request a report online, and then you fill out an application. You put in that fund security code, and then you select which one you want. You know, it's pretty basic stuff we've done. But you could look at one, you could look at all 3 of them, whatever you want. Some people stagger it, so they do it every few months. And then this is an example of an actual Experian report. It's a really old example, but it looks the same. And when you go to these sites, typically you're able to print it. If you have printing capability, you can save it to the computer you're working on or email it to yourself. Just be careful. Like I would do it on our own personal computer. I wouldn't do it like on anyone else's system or even at work or anything like that. Because it's got your personal information on it. So your credit report, if you print it out, I just want to kind of put it out there. They're all formatted differently, but each report does have the same basic elements. Sometimes someone will swear that there might be well, I shouldn't say swear. It really does happen. Every once in a while, you might see one item on one and not on the other. It kind of happens, but it's not that frequent. So if you look at your credit report and you print it out, it's pretty thick usually because there's a lot of addendums and information and I can't think of the right word, but just data that we need to be aware of and how to like dispute a debt and all that good stuff. But a lot of the credit really consists of the first few pages. So it will have our name, right? It'll have our name. It will have maybe a previous or current employer, our birth date, things like that, just in the personal information. And then the second section is really important. It's called public records, which isn't represented here. I apologize, but the public records section, everyone has it on their report, but it will indicate if there's been any bankruptcies filed. It will indicate if there's been any judgments, meaning someone sued you for a debt that are out there. And then it will kind of categorize your debt, like revolving, which is basically credit card debt. It will categorize like secured debts, mortgages, things like that too. So it's just like a little section in the front. And then the biggest part of our report is like the credit items, who we've paid, who we haven't paid, how we're paying. Credit reports typically get updated every 30 days by the creditor that we're working with. So if you pay a bill late, not that I want us to pay a bill late, like a debt late, I should say, it typically doesn't appear unless it's more than 30 days late. And then that can have more of an impact on your credit, but that's the kind of stuff that will appear. And it goes back as for a 7-year look back. So whatever happened in the past 7 years, any delinquencies, all of that, the highest balance we've had, it's typically reported on a credit report. And like I said, we'll keep growing on the topic, but just a credit report, that's what it is. It's it's a report of our debt and our loans and our history there. And it's interesting though now, because like if we have to dispute something or there's an issue on it, it's so much easier to do that, much easier than it ever had been before. But that's the data, and they all look different, but have the same basic elements. Some of them will have the public record section, which is important, especially if we're planning on operating a business, or we do operate a business. Like if there's been any kind of personal lawsuit, it can appear there. And it's good for our own knowledge to keep consistent with that, especially if we are business owners and we do have a fear, that something went delinquent or there's been some kind of an issue, just to keep an eye on it. So credit reports, all three, annual credit report, we should do it on an annual basis. And I'll save some questions for the end. I usually like to stop at every section, but because of the nature of it, I know it's going live, and I know there's another workshop going on. I'll probably, unless you have a question, feel free to type it in the chat. I'd be happy to answer it. But I'll definitely make sure we save a little time for conversation at the end. So building that credit, we hear this, we hear that. There's so many different things. People say, don't do this, make sure you do that. So let's talk about it a little bit. So once you look at that report, first of all, if there's any collection debt on there, that's the first thing we really want to clear up. People can start a business if their credit's not where it needs to be. That's not part of owning a business. It means people could be very successful. But if we're trying to grow our business and we need loans to do that, we want to really pay attention to that. So if we do have collection items, a collection item is when a debt goes delinquent. So a collection item could be a credit card that wasn't paid. A collection item could be a library bill. Better double check those. I better double check mine, but it could be a library bill that went unpaid. It could be a medical bill. It could be old gas and electric, old cell phone bills, all kinds of things I've seen. I used to see services like, I haven't seen it for years though. I think they changed it. I think it was like a dance studio or like a taekwondo. It was something like that where, these services were being reported on someone's credit report as a bad debt. So we want to pay attention to that. So a collection is if the debt is behind. And if they decide to pursue a judgment, that means that an attorney gets involved. You'd receive like a summons in the mail, and it would officially be a judgment. Just because we get a summons in the mail doesn't mean it's automatically a judgment. There's typically an opportunity to work with that legal entity and make a payment agreement, whether it's settling it, meaning I pay less than what I owe on it, or going on some kind of a payment plan with a stipulation indicating it won't go further as long as I make those payments. That's stuff that we see all the time, and we try to give people advice on. So if anyone's facing those issues or concerns with collections, or even just being overwhelmed, please, this is the opportunity to reach out. So we could work with the creditors to establish those repayment strategies, and of course people could touch base with us. But building credit, so just to pull it back, we want to see where we stand. We want to clear up anything that might need clearing up or be getting current on. This is the question a lot of people have. They want, how long do things stay there? So typically, items can remain on our credit report for about a 7-year period. So that means if I look at my report right now and I've had a credit card or car loan or things like that, it goes back a 7-year period. That's it. If I was late once and then I got current, it'll show that late payment. That doesn't mean it's going to haunt us forever, but it's out there. The collection account could stay there for a 7-year period. A judgment account could stay there for a 7-year period. They can try to collect on it for more than a 7-year period. But as far as credit reporting goes, that 7 years is that 7 years. The trick of it, though, is that sometimes a collection account can turn into a judgment. And if it turns into a judgment, that can start the 7-year period over again. Sometimes if we start, I have to word this carefully, but like if there's debts and collections that we want to clear up, we really want to make sure we're able to clear those up and have some that it's going to be affordable and that we're not just, making payments to make payments. Because sometimes what can happen, and there's some gray area here because it's very unique to the individual, but if they have like old debt and they're starting to make payment agreements again, it can kind of get reported on your credit report and fluctuate those numbers, because it's a collection account that's, coming new. The more current the debt is in collection, if I said that properly, if it's being reported, the more it impacts our credit. So the older the collection account, our credit has probably gotten better since, because it's it's old news. But the more recent the collections are reported, the more it can impact us. So that's a 7-year period. Also, a Chapter 13 bankruptcy, that's a bankruptcy where you pay back a portion of the debt. That can stay there for a 7-year period as well. 10 years for a Chapter 7 bankruptcy, and which is a complete bankruptcy. And I know it sounds funny the way I'm saying it, but Chapter 13, you repay a portion. Chapter 7, all of your debt is dismissed. There's a lot of ifs, ands, and buts in there. It depends on your income. It depends on what you own. It just depends on your situation, right? So I just wanted to kind of point that out, that we've seen it. We've dealt with it many, many, many times, where someone's filed a bankruptcy. That doesn't mean that, we can't pursue things in the future if that's the case, but we just want to understand, how long it's going to stay there and what our options are. Inquiry. So that means you apply for credits, or even not you just applying for credit. Some inquiries can be promotional, meaning someone's inquiring about you, which doesn't have any impact on our credit score. But some inquiries could be like, it'll show up if you try to pull your own credit report. That's not going to hurt your credit either. It's more if we apply for too much credit too soon, but it will appear there. And, just a word to the wise, if you're worried about any kind of identity theft or fraud, check the inquiries, because that will tell you who's been looking into your credits, whether it's promotional or someone, actually applied for debt or credit in your name. Keep an eye on the inquiries. They appear there for a 2-year period. Now, the student loans and the child support or taxes, those kind of debts don't ever really get removed from a credit report. Once they're current and paid, and if they've never fallen behind before, especially the student loans, the child support and taxes typically only get reported if they're behind, and our student loans just kind of stay there forever. So those are different debt. That's like state debt, federal debt. That's not going to fall under the 7-year rule. So if you're curious, like when you're looking at your report, you're trying to figure out, what do I prioritize? What do I do? Again, we can help you. We really can. We want to. It's really enjoyable to meet different people and the businesses they're operating, and anything we can do to really support that, because there are strategies to help people improve that score or manage the debt that they have, and it's really unique to that person. So I talked about this, and I know we know this. I know if you're operating a business and you are, or renting your space and managing your money, I know that we probably know this, but I do want to just start here. So when we're establishing credit, and because maybe we don't, it could be brand new for some of us, but when you're establishing credit, it means borrowing money. So establishing means, starting, and some smart ways to do that are applying for credit, like a credit card. A lot of individuals, and my stepson was just texting me this today, will start with a secured credit card, which is basically a loan or a credit card where you have money against it and you can borrow that same money. So basically it's different depending on where you go, but many banks and credit unions will offer this. And you might say, okay, I have $300 that I'm going to set aside in a specific account. And then the lending institution will lend you $300. And it's just like a regular credit card. It gets reported like a regular credit card. And you just have to manage it as you would any other credit card, but it's easier to obtain, but it does help you build that credit, as would any credit card. The trick though with credit cards is that like they're good to help us build credit, and they can help us to get, things that we need, and we manage it appropriately, is that if we start falling behind on it, it could kill our credit instantly. Once that first 30-day delinquency hits our score, you can see a significant reduction. Or an auto loan, that can definitely build our credit as well. Sometimes people, if we need to buy a car or we need to get a car loan, I would say sometimes people are like, well, I have the money to buy a car. Should I get a loan? It's like, again, it's not something I can just, do a one-all answer. It really just depends on your current credit profile and all of that. But, getting a car loan does help us to build that credit. But then there is interest we have to pay on that for a specific time period. So we have to weigh those options. All right. But this is about establishing credit. So those are strategies we could do to do that. Lenders like to see at least 1 year of us using credit. This isn't regarding any business. This is personal credit, a good year of us using credit prior to us reducing anything. So that, again, something to think of, like if we're trying to apply for credit, for a business, they want to see that we've been able to manage it for at least a year. And then a trade line is basically a lending relationship. So a lending relationship is a credit card, a secured credit card, a car loan, all the stuff we've been talking about. It's just when a lender is looking at your credit report and they see these lines of experience, it's called a trade line. And a few trade lines, good 2-3 trade lines is good. Not that we want more debt. We don't want to fall into debt. We don't want to fall into any challenging situation there, but those kind of things can help us if we're managing it responsibly. There's another piece to this that's not necessarily part of this program, but I wouldn't recommend anybody, if we're just starting out credit without having some kind of a budgeting system at home. I would definitely recommend letting one of our counselors help us, or even just bouncing ideas off of them or guiding us to figure out ways to save money, priority bills to pay, ways to structure our spending. It really is helpful. It's not something maybe some of us were lucky enough to have people teach us this, or we're good at this, but it's not something that we typically learn every day. A lot of people have to learn the hard way when it comes to, managing expenses of that sort. So again, I'd say, yes, credit's wonderful. We want to build it, but we really want to have that backbone before, even if we have the credit and maybe there's debt that we're trying to repay, and we're trying to figure out how to manage that. And again, on-time payments and low credit balances. The lower, especially credit cards, like the lower our balance, I should say only credit cards really, the lower our balance compared to the credit limit that you're given will improve your credit score. So if I have a credit card and I have like $1,000 credit limit, they say don't exceed more than 30% of that line. So if I owe $300 or less, I'm going to tend to have a much higher credit score. So again, something to kind of keep in the forefront of our mind. If there's errors, we want to make sure we fix those. So that's really important to monitor that. And if you do need to dispute it, it's a lot easier than it used to be. We can go right online, and we can usually every credit report, once you pull it, it will say initiate a dispute, and you can work through that process right online. This is a sample dispute letter. You can use it for the text. We'd be happy to supply this data to you. You can get it online pretty easy, but it's just like, why am I disputing it? I'm disputing this debt because it's not my debt. The debt's been paid. Sometimes even if, debts, a collection account's been reported for more than 7 years, there might be some strategy there, very unique to the situation. Definitely need to meet one-on-one with someone for stuff like that. But yeah, it's just something to help us. And then once you've disputed it, within 30 days, they'll usually let you know what's going on. Sometimes much faster if the debt's been eliminated, or I shouldn't even say debt, because it could be item. It could be our name spelled wrong. There could be an inquiry where we didn't authorize. So there's all kinds of items, but usually within 24 hours, you're notified of the status of that dispute now. And if you haven't been, I would restart it. Your credit score, I talked a little bit about it. So like if you look at your annual credit report, you're not going to get a score with it. I mean, you can, there's a fee to look at your score. I know there's a lot of like apps and services that you can use to kind of gauge that credit score, but they're really used as a way to help you evaluate your credit practice. And they range between 300 to 850. If you're trying to get a loan, many banks and credit unions, I'm not going to say all, I almost want to say all because I've never come across one that hasn't. They use what's called a FICO, F-I-C-O scoring model. That's a company that creates these scoring models, and the higher the score, the better. Remember how I said like 640 and higher? I could be off. They might want to see 620. Some might want to see 680. So it depends on the lending institution, but it really helps them predict the likeliness of repayments. and each creditor has their own opinion of good credit. So if you're trying to get a mortgage and they're looking at a FICO, they might be looking at FICO for mortgages, right? There's different versions. They make updates all the time. Auto lending may have their own system, and credit card may have their own system. The business is a whole other ballgame. We'll talk about that in just a bit. But when it comes to our own personal, that's just a little bit of strategy behind it. If we're using the apps to kind of gauge our score, the big thing is that they have different factors that create it. So there's like 5 main things, you can call it 5 or 6, that are really pulled in when we're trying to view that score. It's like our history, our payment history is number 1. We need to be, it's recommended to be on time with the debt on our report, because it could really impact your score. You can lose over 100 points from one delinquency. The amount owed, also you can see the other term is utilization. How much am I using? So like this is only really pertaining to credit, because if we are using too much of our credit balance, our score is going to drop. So that's why we want to try to pay it down appropriately. And, keeping the accounts open is helpful too. If you're able to, it really just depends. Sometimes it's better not to, but as far as the score goes, open lines of credit that are paid down, have lower balances, are going to make our score go better, get higher, right? The type of debt we have. So revolving is basically credit card debt, and the installments are car loans, mortgages, things like that. I want to put it out there that like the student loans, car loans, mortgages, even if we owe a lot on them, it's not going to knock our credit down at all. It may reduce our capacity and our affordability, because that's money that's going out, but it's not going to necessarily, ruin the game. So length of credit, like I said, the longer we've been using credit, the better. And recent credit is basically, that's a new credit. Those are too many inquiries too soon. So those are the big points we want to do. Pay it on time, watch your balances, keep an eye on your inquiries, don't apply for too much too soon, and just kind of manage it for a while, at least 1 year. The longer we've been using credit responsibly, it naturally will tend to increase, especially if those balances are paid down. So just to kind of summarize this, these are things that can make our score go down. Not enough history, not enough history, too much credit card debt, too close to our limits, too many inquiries or applications in a short period of time, late payments, collection items, things like that. Judgments, we talked a little bit about that. Bankruptcies, we touched on that. We didn't touch on a repossession. Repossession is basically for auto vehicles. If they take your car because we're not paying that balance, they can get tricky, because if someone takes the vehicle, we might assume that we don't owe that money anymore, but those are 2 separate transactions. We promised to pay that car for that loan, and if we can't pay for that loan, even if the car is repossessed, we still owe that money. So usually what they'll do is when I say they, the banking or lending institution will sell the vehicle at an auction and then apply that then balance toward your balance. It's called a deficiency balance. That can get tricky depending on the timing. It's something we really need to keep our eye on. That can damage our report, because the debt's going delinquent. And sometimes they go to judgment. So it just depends on, not all debts go to collections, even if they're behind. Not all debts go to judgment. It really just depends on how that creditor is reporting. But most of them will go to collection or have some sort of be reported. Charge off means the debt is now with an agency, so they charged it off. They're not going to try to collect on it now, but ABC or 123 agency may be reaching someone. Poor mix of credit types, that can kind of throw us off a little bit too, meaning I have too much credit card debt and not enough, like an automobile. I don't have that history out there. And then things that can make it good, we kind of just the opposite of everything I said, but paying on time, not a lot of debt, low balances, good history for a while, not too many inquiries, and a good mix of credit. So our recommendations, especially if we're trying to, really get control, or not even control, maybe we're in a good position with our credit, right? And probably a lot of us could be, but we just want to have that good understanding. We want to maintain it. Maybe when you want to, accelerate it, keep those payments on time, keep those credit card balances less than 30% of their limits. And that don't, even on any single, I wouldn't approach the limit on any single card. Okay, that would be our advice. Keep the older accounts open because it shows that longer history. If I was to close a newer account, it may not impact me as much as if I was to close an account that I've had for 5 to 10 years. So again, being aware of that. Only apply for credit when needed, because you definitely, or shopping around within a short span of time. Because if we apply for too much credit too soon, that can throw off our report, right? So that can throw off our score. So those are just a few tips. I mean, maybe we know this stuff, but I'll tell you, for the conversations that I've really had with people, if they wish they knew some of these little tips and things like that, their whole credit situation could be different, right? And the whole way they manage money could be changed. So just a few tips for our business owners here. Not that this is business advice specifically. Like I said, we're more focusing on the personal side of things, but just a few tips. Make sure our business is seen as a separate entity. A lot of times when we see people who are, own a business and they're managing expenses, if they're struggling with credit or debt, sometimes there might be some commingling going on, not intentionally, but just you might use a card. You say, get you this card, that card. So just make sure it's set up as a separate business and you're operating your cash that way. Do research on which entity is best for you. The place that you would touch base with to figure that out is either an attorney, right? So we're not going to tell you that because we don't know. Either an attorney or like a mentor, something like that, or both. They have SCORE, we have our Small Business Association, different organizations that we'll go over as well, that can help you with that. A lot of places are not set up as the appropriate, from what I'm hearing, maybe not necessarily be the appropriate entity. And what I mean by that is it a DBA? Is it an LLC? Is it incorporated? Where do we stand with that? And search the guidance of business counseling, especially as you're growing, because that can make all the difference. The different type of entity, the type of loan you're applying for, educate yourself like you're doing tonight. I mean, I'm so glad to be able to do this, but there's so many more, as you're aware of, like resources and trainings and things like that, to really help us have that good control. And it feels good to really inform ourselves so that we can make informed decisions, and really help our business be successful. This is just another one. I don't know if this slide is really necessary, but well, it is because it's part of the process, but a federal employee ID number. If you've already established your business, you probably already have this, but it's a free service. There's the site. We can get you that link as well. Another part that can help us, not necessarily borrowing, but establishing a relationship. This is very helpful with a bank or credit union for your own business transactions can really help us to grow. So research the banks and credit unions, the different services that they're offering, people you're comfortable with speaking to. That really is an important factor when it comes to future lending opportunities. And again, dedicated business line that can also help you as well. Having a business card or a line of credit and manage it responsibly, that will definitely help you to build that credit. Again, they're going to still look at our personal credit for that if we haven't done that already. So that's something that we need to be aware of, but it will help us to not only grow and succeed if we're managing it correctly, but give us future opportunities for lending. The vendor relationships, as I mentioned, and supplier relationships, they definitely could be helpful too. That's a big part of credit in the business world. Is not we're a little separate than that, but I know that that's a big part of it. Is when you have those vending relationships, it can help you if they're paid on time and managed responsibly for future lending opportunities. So again, something we want to be aware of and manage the best we're able to. And then when we do have that, when we do start establishing that business, check that report periodically to on a regular basis to ensure that things are where they need to be. And as far as pulling a credit report, there's your DUNS report, but that you can even go to like Equifax. Once you have that established, there's Equifax for Business, TransUnion, all of them will have some sort, I believe all of them, I don't want to speak out of context, but I know Equifax does. Experian, I believe as well, they have that business report that they create as well. So Remember, not all business creditors report their trade information. It's different. Like they might not report that like our debt would on the personal report. So it's good to keep those records and inquire about that. And making sure that we're managing those responsibly and paying on time, which I'm making sound so easy. It's not, life gets in the way sometimes. We can get overwhelmed with things. It doesn't take much, especially when we're in a pandemic, but that's why we're really glad to be able to offer the counseling and education that we're able to. And I mean, we're part of the picture. We have many different partners that we work with to help people be successful and continue to educate yourself. Successful business owners continuously educate ourselves. There's a small business administration. There's also the library here. We have the public library, our central, that has an entire floor dedicated for business owners, whether you're starting one, looking to grow one. There's different connections. I think sometimes they're right on site as far as like legal services and things like that, but there's their website. You can stop in that branch as well. So if people do need to get connected to our service, we're very happy to be, part of the community here. We are open for in-person counseling as well as virtual counseling, whatever works best. We have evening hours, Monday through Thursday from 8 until 8, Fridays from 8 until 5. And we're really committed to providing that guidance to help people achieve that peace of mind. Sessions are typically booked for about an hour. And whether it's, if you own a business or you're managing your own business, that would be categorized as a small business credit counseling session. In any session, we're going to really look at all the same factors. We're going to talk about what the purpose is. That's a very important step. Like, what is the goal that you're trying to achieve? We'll look at our budget. We'll look at our debt. We'll develop an action plan and give advice. There's different programs people can use if they are overwhelmed with, say, debt or their collection items to help them consolidate into one payment. A lot of times we can help people to reduce the interest rates or bring our accounts up to date if they need that support. Not everybody's going to need that. It's free to talk to someone. It's individualized. It's confidential, comforting and motivating. So I kind of went into it a little bit, but we do the budget and credit counseling. A debt management program is a super, super helpful program, which many people use over the years. That's the consolidation. So it's not a loan. It's just simply that many other creditors that people owe money to will work with a credit counseling agency in helping someone to get current. If you're getting any kind of late fee or over limit fee on a credit card, you need, please just reach out. I can even give a link out to an evaluation so that you can get connected with us quickly, because those can add up quickly. The interest can the interest can increase and debts can get out of control. So a debt management program stops those fees and it helps people to get on track so they can pay those balances. We also offer first-time homebuyer education, which is imperative in these times, especially for business owners. There's different things that might be taken in consideration as far as your income, and it's really important to educate yourself about that. If someone's in a mortgage and they're having challenges, even with rental, I didn't add that here, I'm sorry, but like if we're behind on rents or personal rent, foreclosure, we can help people educate themselves, connect themselves to resources and help them rebuild from there. So reverse mortgage counseling, bankruptcy, those are all the different programs and services that we offer in conjunction with our small business counseling, or I should say it's like financial counseling for small businesses. And then our last program is probably one of our biggest, but it's the financial empowerment counseling, which is in partnership with the city of Rochester, which is, a great pride for us. And this is a free one-on-one financial counseling, and it's a public service. The difference between this and credit counseling is that this is more of an ongoing support. You can go as many times as you need to, and there's counselors located in different locations. They can be reached virtually as well, and there's different counselors on site at, say, Rochester Housing Authority or Monroe Community College, and we can help with issues beyond just debt. Maybe it's identity theft crisis or developing different spending patterns or savings or homeownership. A lot of times people will start here if they're looking to start a business and they just need that support. I can't tell you like the amount of times I've heard, if I only knew that, I would have gone down a whole different path, and that's why we're really happy to be able to offer this workshop and connect people with the resources that they need. So at this point, I don't know how many people we have 9 people on the phone.
So if you stop sharing, then we can see everyone and we can start talking about maybe get a few questions there. There we go. Now listen, first of all, before we take questions from our members or comments, I just want to say I can't stress enough how important I think this is, Andrea, especially in this day and time where we see our economy heading, and we're especially here locally in Monroe County, Rochester, New York, where we know the statistics as regards to financial wellness and poverty, and the numbers are very daunting and sobering, especially when you talk about Black and brown people and people of color. So I think me being someone who's gone through your financial management programs, credit management programs, and who's been successful through those programs, and it led me to being able to buy my first home, which I still live in today. I can't speak enough about this very, I say well-kept secret, but it shouldn't be a well-kept secret in my opinion, the Consumer Credit Counseling Services of Rochester. Everyone could utilize this information on how to, because what was interesting is you said it's free, and you give people kind of a plan. You give them goals, the budget, the debt review, and an action plan on how to get out of that situation, how to better your financial wellness. And, you know, if there's ever a time where people should be really working to do that, I think it's now and before, you know, we find ourselves with our economy, you know, going down. This is the time to really be looking at, you know, consolidation. How can you save money? How can you get those creditors kind of like off your back, if you will, working towards a plan to getting them paid, getting your credit better, understanding your credit, and especially for young people. If you're out there and you're listening to this, you say, oh, I know all this stuff, but you got kids, you got young kids who are coming up, who've never, maybe you don't know, they won't listen to mom. They won't listen to dad. They're not listening to us, but they'll listen to a professional. They'll listen to someone else. They'll watch this video and get this information and know the bare basics about their credit report, about what's important, about the tips that's been shared. Share this video with your clients, with your customers, with individuals, to give them that basic information. And you'd be surprised at how many older folks are not aware of these information and aware that they can go somewhere like Consumer Credit Counseling located on University Avenue, or to one of the financial empowerment centers that the city has that helps them for free to kind of get, it's hard to get your mind in the game when your bills are piled up. It's hard to get your mind in the game when you're in a financial array. I know it, I'm speaking from experience. So that's why we keep giving these classes, why we keep talking about financial wellness, because you want to talk about stress, when you can't pay your bills, or when when you're scared to open your mail. You know, I was at a point I didn't like opening my mail because I knew it was another bill in there and I didn't have enough money to pay it. But I'm grateful now where I can open up the mail and not be afraid, because I went to Consumer Credit Counseling and they helped me get back on track. So with that said, are there any, let's look at the chat first. I think we got some comments, some
That's
stuff
me.
there.
I typed
Okay.
in, I'm so glad to see that someone spoke with Marissa. She is wonderful. She's really nice. And I put our direct links to the small business counseling as well as the FEC program. And
Awesome.
I just appreciate you, Willie, talking it. Like, I'm so happy that, you know, you're such an advocate for the program. I mean, I don't know where I would be if I didn't work here. I'll just put it out there. Like, I didn't know. I knew nothing. No one really, I knew a little bit. I knew not to spend more than you make, but you can do that so easy with credit. So, and you know, you just kind of listen to this person, listen to that person. So I'm just really thankful that I've been there, and I learned by working there, honestly. That's why I love connecting with people, because it's just such a hot topic, and people don't talk about it though. I mean, that you do, but not as much as we need to. So I'm just glad that we have that opportunity to do that.
We got a few more minutes. Does anybody have any questions, comments they would like to share with Andrea? Okay, we're gonna log off of live, but we're gonna ask our members to stay on with us. We just have a few announcements we're gonna make with them. But we want to thank you, Andrea, for coming again. We're sure we're gonna have you back. We're gonna be contacting you soon about other events we have coming up. And we're just always grateful for you to share this very timely and it's timeless. It's timely and it's timeless information that we can share with our families and our community and our networks. Thank you so much.
Well, thank
God
you
bless
for having me. You guys have a wonderful evening and thank you.